Hello and welcome to My Finance Teacher. I hope you guys are having a nice day. And today I want to briefly talk to you about crude oil. What do I see on crude oil? Well, there are quite a few of positive signs, but there is a cautionary sign as well, and we're going to talk about that. So starting with the positive signs, what I see on the chart is an inverse head and shoulders formation, which generally is a bullish sign for an asset. And the neckline in this pattern seems to be around 54.5 or so, with the low at about $43 or so. That would give us the height of the head at about $9. In that case, if over the next several days, if over the next week or so, crude oil confirms the break above that neckline, a measured move would be crude oil reaching somewhere around $63. That's the height of $9. The next positive factor I want to have a look at is this 100-day moving average. Relatively recently, crude oil has been stretched far below 100-day moving average. We're still below it, and even based on the mean reversion, we should see crude oil pull back up towards this 100-day moving average. Next, look at RSI. It's not at overbought levels yet, so again, there is still some potential for crude oil to continue its move upwards. And lastly, for the positive factors, let's have a look at Fibonacci retracement numbers from this recent high at about 76, 77, all the way down to this recent low at about $43 or so. Let me stretch it a little bit. And even if this bounce retraces only 50% of the recent decline, that would still give us the price level of just under $60, which would be very, very close to this 100-day moving average. And that brings us to the negative factor that I want to mention. This 100-day moving average at about $60, $59 might act as a relatively strong resistance zone. So crude oil might only end up bumping its head against this resistance zone and pulling back down, at least temporarily. And another factor that sort of confirms with this less of a bullish outlook for crude oil is MACD. And we see that one might expect MACD to cross down relatively soon. And from this example, in let's say October last year, whenever MACD crosses down, that generally is time to sell the asset. So based on how MACD behaved over the last several days, it might actually cross down over the next couple of weeks. That might also coincide with the time when crude oil bumps its head on this 100-day moving average. So that is my outlook for crude oil. Whether we see a measured move above the neckline all the way up to $63, or we see crude oil only reaching something like $59 at around the 100-day moving average. In either case, I think there is still some sort of upward potential in crude oil. I'm still holding USO, which I entered at about $10 or so. And even if crude oil or USO only retraces, say, 50% of the rally, that would be a nice price of over 12.7 on the USO and 59 on crude oil. I think there is maybe a 50-50 chance that crude oil slices through 100-day moving average. What do you guys think? Are we going to see a decline down from 100-day moving average? Let me know in the comments below. While you are there, remember to hit the like under the video, subscribe to the channel if you haven't, and have a nice day.